Hello everyone, Torin Dove here on the Torin Dove Financial Channel. And genuinely, just what a time to be alive. I was going to kind of script out a bit and bring some stuff together to talk about this video, but I have genuinely been so excited for this the entire workday. I literally just got out of work, just got back to the house, and I just could not wait. I couldn't even do the scripting portion. I was just so excited to talk about this subject. As the title of the video suggests, meme stocks are officially back. Now, I'm somebody who's kind of going through the traditional finance process. Of course, I'm still learning. I'm getting my bachelor's degree in finance. And meme stocks are something that are really viewed as a negative. And I'll get right into this because I'm going to have a very different opinion than a lot of people on this issue. If you're on the fence about participating in the meme stock craze this time, don't at all. If you're going to participate, I personally am sitting this one out, but I love watching it go down. It's like some of the most enjoyable things in my life. But if you're going to be participating, I just want to give you some perspective, some tips, some things of that nature. If you have no idea what's going on, which is definitely possible, I'm going to be introducing you to my new favorite trade play, the Open Kiss D's Nuts play. I'm not joking. I'm going to explain it, but it's going to be a blast. So a lot of you might be aware, I just became aware of this, as I called it, a play today as I looked on Yahoo Finance in trending tickers during my internship, and I saw Kohls. Now, for those of you who don't know Kohls or have lived under a rock and never gotten clothes out and about, they're like Belk and Dillard's and Sears. Well, the point being, they're literally every department store ever that sells clothes. There's no distinguishing factors between any of the stores I just mentioned. And they've been taking a bit of a dive recently. Their revenues the past 5 years have been going straight down. And again, this isn't a company that a lot of people today would ever be bringing up to invest in. And it was actually over 50% of the outstanding shares were sold short. And a lot of these are going to come from big hedge funds and giant financial institutions that are basically betting on Kohls is going to continue, their share price is going to continue downwards, and they'll probably end up filing bankruptcy. And that's a real possibility. But specifically for Kohls, this was part of a short squeeze where a bunch of retail investors today just poured money into Kohls stock and shot it up over 30%. It actually opened the day up over 100% and then got halted immediately, which I'll bring up halts in a little bit into the video as to why investing in meme stocks isn't sustainable, but it's definitely fun. So anyways, I want to try and not make this too many rando tangents I just bring together. I want to try and draw connections to the points, but really it's just such a fun topic. I'm just excited to discuss it at all. So it's no secret, as I've mentioned before, that from traditional finance, that being traditional finance media outlets, thinkers, investors, they see meme stocks as kind of dumb and stupid. And the argument that I keep seeing pushed onto my newsfeed is it's not sustainable. And for me, that kind of is just a no-brainer. It's literally in the name meme stock. That's I don't know a single meme that's lasted into perpetuity. So it's kind of a given. That's a really dumb reason. The reason they should be giving is somebody's going to be left at the end holding the bag, so to say, and it's just going to get pulled. But they don't go into the actual reasoning. They just kind of say it's stupid and you're kind of going head to head against a giant hedge fund. But I think one of the reasons that it really gets brought up such negatively to go against these larger funds is that meme stocks, when there is a unification of retail investors, it's the only time the little guys win ever. and it's wildly entertaining, like wildly entertaining. I mean, for me, one of the reasons I really enjoy just sticking to owning vanilla stocks and just owning the actual equities itself and not doing derivatives or anything of that nature is that I'm very aware of the asymmetry of the bets I'm making. So basically, I know if I'm going to lose everything, the max I can lose is up to 100%. After I lose all of the money I've put into a position, I can't lose any more. On the flip side, by owning vanilla equities, my earning potential on an investment is technically speaking infinity. Like, there isn't a set number. And especially when I'm dealing with time periods of significantly longer than 5 years, it really can 800, 900% is not out of the realm of possibilities. I mean, just look at Nvidia the past 3 years. But hedge funds, in kind of their race to greed, have tried to take strategies a lot of the times that just make the process of making a lot of money fast as humanly possible. And so they've actually flipped the game on its head, where the max they can earn is up to 100% if they enact a short position, and then it goes all the way to zero. But technically their loss potential is like 100, it's flipped the bet on its head, so they can lose technically up into infinity depending on how high the price of the company goes. And so me personally, when you look at like somebody who's taken a game that's statistically in your favor if you play your cards right over the long term, and make it statistically not favorable in place of making money fast as possible for your accredited investors, you deserve to get burned, I feel like. And so I always enjoy watching them, like these retail investors, pour in. Like, for instance, Kohl's average volume is like 8 million shares traded, and today it was like 208, so only 200 million more than normal. And watching like these giant hedge funds have to panic and move and buy shares to try and mitigate losses, it's a really funny process to enjoy, and I love rooting for the smaller underdog story. I think we all do, but it's not going to last forever. I don't see that many people during... I mean, obviously there are over-exaggerations if you're going to look at Wall Street bets and take everything those people say is 100% facts of the situation, diamond hands, never selling. Like, we've been through this process enough times that everybody knows it's going to get pulled in an instant. Like, we've looked at cryptocurrencies that have come out and been rug pulled. We're all aware of how this game works. So anyways, kind of where I was going with that is there's the Open, OPEN is the ticker symbol that was 2 days ago, and yesterday's big one. Then we had Kohls, KSS, and the third one that's still yet to like make necessarily a splash, but definitely today it had a significant jump in volume, and post-market it's been going absolutely crazy, is Krispy Kreme, which is donut. So, and the ticker symbol for that is DNT. So, DNUT. So, the funny thing is that the play itself is the Open Kiss D's Nuts play. So just imagine, because again, people are going to make serious money from a meme stock craze. I mean, literally there are giant financial institutions that have hired people to just monitor these chat forums, and then anytime there's like serious activity on them, specifically in a name, they're supposed to try and jump ahead. Like, this is a very serious thing. But imagine a situation where somebody has made a lot of money to the point that they can retire, and in the future, you know, their grandkids are like, "Dad, why were you able to retire at 35 years old?" And they have to be like, "Back in my day, I participated in the Open Kiss These Nuts play, and we took all the money from the hedge funds." Like, that's awesome. I feel like that should be the dream of capitalism. Again, not endorsing participation in this whatsoever. It's not sustainable. you have zero guarantees of making money, like actual guarantees. You have zero guarantees of making money, and you're dealing with like a high circumstance in the moment, tons of greed, tons of fear. There's going to be halting, which kind of absolutely kills all of the momentum you're going to see. And so there's a strong chance you'll end up actually losing money doing a trade like this. But that being said, if you have the perspective of it, it's kind of similar like going to a casino. If you have the perspective that you're going to a casino with X amount of dollars and you're going to make so much money, you're not going to do well. Like, you can, but that's a bad way to look at something where the odds are not in your favor. Whereas if you went to the casino with an amount you are willing to lose and viewed it as, I'm going to go pay $200 so I can play poker and blackjack for 6 hours and it'll be really fun and I'll get to meet people and have some drinks and overall just treat it like I'm going to pay cards or play cards and this is kind of like the buy-in to go play cards and meet people, then you're probably going to have put an amount you're like okay with losing, treat it like you've just spent to participate, and B, you're going to, when you're up, realize, okay, I've actually made some money here, it's probably a good time to call it a day. Whereas if you have these unrealistic goals and expectations in your head, when those don't start to happen, or if there's a like large sell and it's kind of everybody's unwinding, okay, now's the time to scrape together whatever profits I can and leave, you can be the last person holding the bag at the end of the door, and then suddenly you own ownership shares in Kohls, which you don't want. I'll be frankly honest, you probably in big 2025 don't want to own shares of Kohls. Now maybe you can make a good investment thesis as to why it has strong, solid fundamentals, but especially if you've bought in at a price during a meme stock craze where fundamentals go straight out the door and it's just like the definition of a mob mentality, you're probably not getting that money back on Kohls in big 2025. Now, maybe you could get something if they go bankrupt, but probably never getting that money back. So again, be mindful of that. You know, I today just looked at the new issues for CD rates for 1 year. That is 3.950%. If you have made 39.5% of 39.5% return on investment, on your short-term bull run, everybody cheers, take the money from the hedge fund, you have 10x the 1 year CD rate. You've won, sell, and move on. I myself, at times, I wouldn't now because I understand things. I myself, at times, have participated in these. And I've actually done well. And when I have done well in the past, such as the second GameStop AMC craze, when I have done well, it has been because I got in super early to it, realized, okay, this is what's going on, let's act now, saw I made a return, said, okay, in real dollars, this is a TV right here. Sell. Don't look back. Don't look back and see, oh, it's still going up. Like, that is like such simplistic thoughts, and it makes sense because you've taken a game that is supposed to be played over decades and a large part of a century, and you've condensed it into 1 day. You've condensed like the life cycle of an investment into 1 day, which is a really exciting concept, but you have to deal with all of those separate emotions that would come from a company maturing, a company having an explosive growth, all in the span of 1 calendar day, and it's not for everybody. It's not. There will be people that will make a large sum of money and you'll look back and be like, man, I could have done that. You have no guarantee how you're going to act in a situation like that, and the worst thing you can possibly do is lose a large sum of money or something that's actually going to hurt you. Whereas if you bought a couple shares of something, that like Krispy Kreme, you bought a couple shares of Krispy Kreme and it goes down to $3, it's not the end of the world for you. It'll be like, damn it, I bought tickets to something. Like, that'll be the equivalent of that loss. So again, just be mindful if you're going to participate. If you're on the fence, please do not. These are the types of things that when they happen, they like really excite me in markets. It's one of the reasons I really love finances. Something is always going on. Something's always entertaining. There's new news coming out. And then in the retail world, it's, again, the open kiss D's nuts play. Like, I just came off of watching the most recent Surrounded on Jubilee video, and I was at like a peak all-time low with humanity. Is I just watched somebody actually commit career suicide on one of the largest YouTube channels ever and was proud about it. And I was like, man, humanity sucks. And then the open kiss D's nuts play, it restored my faith. I'll be fully transparent. It gave me something to live for. I was like, yes, there are people in this world who understand goofiness, who understand Robin Hood ethics, not Robin Hood, the trading platform ethics, Robin Hood, the man in tights ethics, and I'm behind this movement. I'm not going to put money in it because been there, done that, no thank you. I know how these games work, but from an outside perspective, I'll definitely be watching tomorrow. Now, if I had to put my bets, and again, please don't act on anything I say, and this is not me like condoning it, but historically, when I go back through some of these meme stock crazes and what I've seen, just some trends, is when you start splitting it up into multiple stocks, typically what happens is it'll be the most recent one is going to be getting the majority of the spotlight. So it wouldn't surprise me if Kohls today was a one and done. Open is just like cooked. In terms of the meme stock, there isn't going to be a large coming back, and we kind of saw that today. But if you're wanting to participate, it would be on my bet, and don't act on this, please. It would be on my bet that the real value is going to be on the Krispy Kreme part of this. If you've already signed up to be a part of this, I'm treating it like it's a concert. If you've already signed up, take your bag and run the second you can. Okay, and don't look back. Do not look back. But anyways, thank you. I would have scripted this out a little bit more, but I just couldn't wait. I was having so much fun watching Kohls, looking at the volume compared to the average volume, and just kind of like trying not to laugh and a lot of things. And I really do kind of get behind a lot of the principles of a short squeeze. And this is coming from somebody who one day hopes to work at one of these large funds where I can make a lot of money. And it was wildly entertaining. So if you were an active participant, thank you for making my day at work significantly more enjoyable. I appreciate you. If you weren't, I hope you found some interest in this video. Maybe I brought a little bit of perspective or something. And overall, I'm just really happy you checked out today's video. Thank you.